Hi everyone, thank you so much for joining me. My name is Henry. I'm your friend with financial advice. Give me 1 second while I'm just going to share this so that more people can get use out of this. Here we go. All right, there we go. All right, thank you so much everybody for joining me tonight. Bear with me while I work out the fantastic. Working out the technology. Here I am. Like I said, I'm your friend with financial advice, talking to you today about what even is money. I'm excited for today. I've been looking forward to this day all week because I've been looking forward to telling you guys some of this stuff. In celebration, I'm wearing my elephant shirt. Elephants are a wonderful animal. They're my mom's favorite animal too. So thank you so much again for joining me. So, before I dive into everything, I'm sharing this now from the Plan and Act financial page because Plan and Act, our vision statement is literally giving ordinary Americans access to expert financial advice, and that's what I'm all about too. So that's why I joined this company. So if you're watching this, give our page a like. We got lots of free webinars coming out, a lot of good content as well to help you make money less of a stress in your life. So give our page a like. We're here for you. We look forward to connecting with you. Also, besides that, I don't know if you've been reading the news. GameStop stock has gone way down from where it was before, and you're starting to hear more of these stories about people coming out saying, I lost thousands of dollars trying to do this. And some of the people are saying it was worth it because of their beliefs, and some people are saying it wasn't worth it because they just were trying to make money. And that's what happens with a bubble. Some people end up coming out on the other side, and they've just lost a lot of money, and it's really hard to recover from that kind of thing. And we're going to have a webinar later this month on investing and diversification. I encourage you all to sign up for it. The event is right here on our Plan and Act Facebook page. Go ahead and sign up for it. In it, Bob talks about the 4 core principles of investing, and one of them is don't lose money. So if you're going out there and you're trying to pick stocks and you're consistently failing, you're going against one of the core principles of investing. So if you're interested in investing, there are better ways to do it than following the news. Come join us, and we'll explain some of those strategies to you. But yeah, you're also seeing some of the narrative changing too. I even saw one I think it was like CNBC article that was actually saying what I was saying a couple weeks ago. I don't know if you're watching or if you remember. A couple weeks ago, I was saying that there was a David and Goliath type of narrative being created around the whole GameStop situation, and that turned out to not be quite right. A lot of hedge funds also made money, so it was. The CNBC article was saying that it wasn't just Wall Street versus Main Street. It was Wall Street versus Wall Street because a lot of other hedge funds are trying to take advantage of Melvin Capital losing a lot of money too. So it's really tempting when investing to get caught up in these narratives, and you got to remember that money it can have very very tangible effects in your real life. So what's happened to a lot of people, they got caught up in the narrative of the stock is going to go up, hurrah, and they've ended up losing a lot of money, and that who knows what that could have meant. That might have meant kids' education funds. That might have meant a down payment for a house that they lost, something like that. So try not to get caught up in those narratives when investing. It's best to just approach it from a very rational point of view, which is very difficult, and that's where financial planners come into play. But yeah, so that's something that's been happening in the news. Also in the news, we're seeing that you might be getting there might be a stimulus check in the future for a lot of us, which will be nice to ease up some of that strain. So keep your eyes open for those things. Today, if you're watching this and if you have any questions about anything you see in the news, if you have any questions about what I'm talking about, or any questions about finance in general, feel free to leave them in the comments. I got it pulled up right over here. I'd be happy to answer your questions for you. Today, I'm excited to talk to you about what even is money, because I keep seeing this, there's this thing that pops up in memes and stuff. Money is a construct. Money is a construct. It's not even real, and that to a certain extent that's true. And so I wanted to kind of address that and talk about that. Because this is going to get a little bit philosophical here, so you're just going to have to bear with me, because there is some sort of mindset philosophy stuff that kind of goes into it too. So I'm gonna not even start talking about money. I'm gonna actually start by talking about us. At the very smallest level, you might not know this. I don't know if you've heard this, but at the very smallest level, we are actually mostly empty air. When you think about an atom is the neutron or a proton. Then there's an extreme amount of empty space, and then there's like an electron flying around somewhere. I might have gotten the little trons confused with each other, but most of an atom is empty air, and then a bunch of those get connected together, and that's what we are built of. Our basic building blocks are mostly like empty air. We're like Legos. Legos, they have the little shell, but they're mostly still empty. We're like Legos if Legos were even less. So that's what we're made of. We are mostly nothing. There's even a thing where when two things are touching, like my fingers are not actually touching. The atoms are not actually touching. There's a little tiny space in between them. They're basically repelling each other by like the electromagnetism of the electrons themselves. So there's like a little tiny space between. Even if you think you're touching something, you're not actually feeling that thing. You're actually feeling the space of that thing repelling against you, which I think is pretty cool. So we are mostly nothing. Everything we see and interact with is mostly nothing, which sounds really depressing. Except I think it's something kind of beautiful. It's a difference between existentialist philosophy and nihilist philosophy. Existentialism says life has no meaning, so we can create our own meaning. Nihilist philosophy is more like life is meaningless and pointless, and kind of leaves it at that, which is funnier, but also it's a lot more depressing. Existentialism, historically, people think it's really depressing because it's saying, life has no meaning, but it's actually really optimistic, because we get to give life its own meaning, and that comes into play in everything. We are basically empty air, like I said, but we are each important to each other. You're important to me because we make each other important for each other. That we decide that we're important. Why am I talking in such complex, convoluted terms when you want me to be talking about money? Because money ultimately is basically just as meaningless. It can either be meaningless or we can add the meaning that we want to it. So I know which side that I want to be on when it comes down to those two choices. The reason for that is because if we go back to where money started centuries ago, millennia ago, and think of like ancient Babylon, Mesopotamia. Money started basically as an IOU. What money was originally was, you go to trade with somebody, and I'm gonna use the Beanie Babies again. You go to trade somebody with let's say you have this rabbit and I have this lion. We would show up and we would go, okay, so 1 lion for 1 rabbit, please. That's fantastic. But these are pretty easy to carry. Once you're talking about like 50 bushels of wheat, let's say you had a really good year, you're a really successful farmer in your little village, you got 50 bushels of wheat. That means in order to do any trades, you got to carry 50 bushels of wheat every single time you go to the market. That gets really difficult to do over and over and over again. I worked out one time for the first time in months. The other day, my legs were jelly. So imagine how much more difficult it would be, or how much more effort you'd have to put in to do even the simplest trade if every single time you had to drag your ox all the way to the market. So basically what ended up happening was that people went, you know what, I know you're good for it. So I'm going to write, and I'm actually going to write it down. I'm going to write an IOU. I'm writing it on paper. They were writing it in actual stone tablets, but I'm going to write the IOU 50 ox, because imagine having to take 50 ox to the market. So IOU 50 ox in the and they would actually have on there, from Henry, and that way, people would know this is an IOU from Henry. And then what would end up happening was that whoever held the stone tablet, Henry would owe 50 ox to that person. that might start seeming a little bit weird, but what you got to remember is that this also made trade start to become a lot easier. So that if I was trading in a really distant village, I didn't have to drag 50 ox. Everybody for miles and miles around knows that Henry's good for it, so I can just go, no, Henry owes me 50 ox. Go get it from him. And that's how money started. Because ultimately that's what it was. They believed that Henry was good for the 50 ox, and they took this in exchange for a good or a service. They took this little piece of paper, this stone tablet, in exchange for something that they had. And that's basically what's happened on and on and on up until throughout history. I mean, at a certain point in time, it became gold. People really like the shininess of gold. One of the good things about gold is that you are finding more of it. It's rare, so it can hold value like that. At the same time, it was relatively easy to transport compared to like stone blocks. That some cultures ended up actually making stone circles and things like that, which are more difficult to transport. So we used gold for a while. Gold gets kind of heavy once you're holding a lot of it, and then that's how we got back down to how we got back to paper. Because paper you could just carry it around really easily, and then once we got into the digital age, that's why we got into electronic. That's why we got the plastic cards now, because that makes it even more portable. But ultimately, it's just basically saying, hey, this person's good for it. I'm giving you this in exchange for a service, but this person's good. It's all good. It's a measurement of exchanged value, and you can write that down. It's a measurement of exchanged value. It's extremely useful for trades. It's very important for trades, and especially modern economies. So what ended up happening, and there's one more step to all this. So gold became what we kind of decided was valuable. It was shiny, it was nice, it was rare, so princes and kings and princesses and queens loved it. But at a certain point in America, you might have heard about this, when Nixon took America off the gold standard. So up until then, every single dollar could be exchanged for, if you had $1, you could exchange it for $1 worth of gold. And that was where the paper money took its value from. Now, Nixon took us off that gold standard, which means that suddenly that piece of paper wasn't tied to any piece of gold. It wasn't tied to anything tangible anymore. But in a way, it became meaningless. But at the same time, we all still agreed that it was worth something. And the reason why is, I tried to actually find this. I don't even have any cash dollars on me anymore because I don't carry cash around with me. But it's all because it's legal tender of the United States. It can be you can read it right there on the dollar. It says this can be exchanged for debts and services in the United States. I can't even remember the phrase anymore. But you can exchange that for debts and services in the United States. The government backs the dollar. The government says this money is good. And that's why we can use it as trade in a country. Basically what the fiat currency comes down to is how much faith do we have that that this government is going to be good for this debt. So that is the basic overview. That's also why some currencies suddenly lose a lot of value, because those countries might default on their debts. They might have taken out loans and gone, basically declared bankruptcy, and that's why those currencies lose all their value. Because it's one of the important things for something to keep value is it's got to stay kind of rare. For instance, and this is going back to the Beanie Babies, let's make this something more tangible. Beanie Babies, people were buying these up we were buying these up a lot in the early 2000s. I got a whole case full of them because we thought that these are going to be valuable. The thing was that literally everybody and their mom bought Beanie Babies. Because they're so not rare, there are only a few Beanie Babies that are actually worth anything. Like these guys aren't worth anything. I don't have anything that's any Beanie Babies that are worth anything, and the reason why is because they're not rare. They just don't hold that value. And in a similar case, if a country starts printing a lot of money, suddenly that money isn't going to hold its value. It's not going to be as rare. It's going back all the way back to what money originally was. If everybody's got bushels of wheat and I show up trying to trade bushels of wheat, it's just not worth as much. Everybody's got bushels of wheat. Why would I want more bushels of wheat? So that's what can happen to currency, to money. But ultimately, right now, money's built basically, their currency system is on the fiat system. It just means the faith we have in it. So in a way, it definitely is a construct. It's something that we humans developed to make trade easier, to make so that we could you could give me one thing and I could give you something in return without having to drag 50 ox to market. So it's a construct in that sense, and it's meaningless in the sense that it's not literally tied to anything of specific value. Value is only what we make it. So we end up getting to this point where money is a construct. Does that mean that money is meaningless and money is pointless? Or does that mean that money has a meaning, has whatever meaning we give it? And I think that we all, whether we are conscious about it or not, we all do that second one. We all give it meaning, whether or not we mean to or not. And for a lot of us, we let money, and I know this because this happened to me this happened to me a few years ago, where I thought, the meaning that I gave money was that money's going to be the thing that makes me happy. Money's not the thing that makes you happy. The things that you can do with money are what makes you happy, but those other things are the important thing to keep in mind. Money can give you access to time with people you love, but the money in and of itself, it can hold a lot of power over us, and it's just important to remember that it is a tool. It has the meaning that we give it. It is not meaningless because it does give us access to some things that we can enjoy. If you're in a place right now where money is just a source of stress, where money, even thinking about money is makes you upset, that's okay. And honestly, that I'm glad you're listening to this, because feel free to reach out to me, to reach out to Plan and Act in general. We have Bob's got training us all in coaching techniques, because this is literally what we're about. We want to be able to show up for people, and we want to be able to make sure that money isn't a stress, that money is just something that helps give us joy, because that's what money should be. That's what it was created. That's why we kind of accidentally created it millennia ago, and that's why we continue to use it today, is because it gives us access to things that should be giving us joy. So if there is, feel free to reach out to us. I like to think that we're pretty personable people, so we would love to talk to you. But yeah, next time you see that phrase, money is a construct, think about it. Like, yeah, it definitely is. So is it going to be a construct that is going to make you unhappy, or is it a construct that you want to find ways that it can drive happiness in your life? Because I promise you, there is a way for that to happen. So that was the big thing that I wanted to talk about today. Again, if you have any questions, feel free to post them in the comments. Today's going to be just a short one, just because I really want. That was really something that I keep seeing pop up online over and over and over again. But remember to give our Facebook page a like. Remember, we got the free webinars coming out all the time. The one at the end of February is going to be on diversification. We're actually going to touch on Bitcoin and how to use Bitcoin potentially as part of your investment portfolio. I know a lot of you are interested in cryptocurrencies and what that could possibly mean. I mean, if we're talking about money doesn't mean anything, cryptocurrencies kind of take it to another level, because suddenly it's not even we have faith in this government that it will uphold its debts, but it becomes just we have faith in this software and this technology. So it really, money at that point, which potentially we might be heading towards, who knows? We can't predict the future, but if we do head in that direction, then money really will have only the meaning that we give it. So we're living during some pretty exciting times because of that. Who knows what's going to happen in the future? But one way or another, it's going to be pretty exciting. I mean, and we actually have some blog entries about this too. Even Ray Dalio, the founder of the world's biggest hedge fund, even he came out recently and was like, we have to, he's still exploring on how to use Bitcoin correctly. But he said, we have to give this community credit for making this technology survive for over a decade now. I mean, that's pretty impressive. So who knows where it's going to go in the future? It's gonna be an exciting ride. But we'll be touching on that, what cryptocurrencies can mean for your investment portfolio, what that could mean for you, as well as other ways to diversify your portfolio. We're going to be talking about that at the end of this month. And next month we're going to be talking about something called factor-based investing, which is basically a way to just tweak your portfolio just by a little bit so that you can get a little bit more return for a little bit more risk. There's some pretty cool scientific theories basically that came out, mathematical theories and behavioral science theories that came out about how the stock market works and how to really get the most out of it. So we got a lot of really fun stuff coming down the pike. Again, please like our Facebook page. If you have any questions, you can always feel free to reach out to me. I'm Henry. I'm your friend in finance. I would love to help you out with anything that's on your mind. That's going to be it for me tonight. Thank you all so much. Hope you all have a good day. Bye.